Good morning, everyone, and thank you for joining us on Morning Markets. Today, I wanted to look back at the US employment report from Friday and then look to the week ahead. What are some of the key events that we'll be looking at and we'll be commenting on Morning Markets as the week progresses? So looking back to Friday and the US employment report continued really to highlight that ongoing strength in the US economy, with around 261,000 jobs added over the course of the month. Consensus or market forecast had been for around 200,000 jobs, so positive there. And I think also looking back at the report from September, we saw quite a material revision upwards in terms of the number of jobs added as well. And that just continues to highlight that ongoing commentary that we've been having over recent months about the strength and the resilience in the US labour market. Yes, the unemployment rate did tick up marginally, but it moved up to 3.7%. Over the past number of months, we've typically been sitting in that range of 3.5 to 3.7%. What does this mean? It means that really we continue to think about labour market, labour and price inflation continuing to be one of the key challenges for the Federal Reserve. And indeed, that's why we've got this contrast in how they are thinking about the peak in US interest rates, likely maybe to be higher than the market's thinking, versus here in the UK, where we heard from the MPC last week, where they suggest that the market is maybe pricing too aggressive an interest rate trajectory in the UK. So an interesting contrast there. I think the other thing really it does highlight is that broad-based strength in employment in the US economy. Certainly we've seen the headline grabbing attention of a number of firms where they've been making significant changes to jobs, but really that's not as evident when we look across the broad public and private companies in the US. I think then turning to the week ahead, certainly we'll be focusing in on a couple of key events. When we look at from a political perspective, we have the midterm election in the US, where we have all of the seats in the House of Representatives up for re-election, and then around a third within the Senate. When we think about what's likely to happen there, usually it's the incumbent, in this case the Democratic Party, which will lose a number of seats. And given the slim majorities in both, that will certainly be important as we look forward. From a market perspective, probably likely to look through it and just think about the ongoing economic backdrop that we've got. And that brings us then to be thinking about the inflation report for October. Really what we need to see from that is a change in the dynamic, particularly as we look at the core level, that level of inflation which excludes the more volatile components such as energy and food. And we'll certainly comment on that as we get through the week. The other thing that I just also wanted to touch in on was on Friday we saw the oil price was strong. You can see that in the ticker up around 4% when we look at Brent. This very much seems related to the dynamics in China, where there's this ongoing speculation about a change to their zero COVID policy, trying to reopen the domestic economy. And that was certainly one of the reasons maybe why that has come to the fore, was just when we saw Chinese trade data this morning, where both exports and imports were weak relative to market expectations, and really speaks to slowing down in the global economy, China's trade, their exports playing into that over the recent months post-pandemic. When we look at the domestic economy, that's somewhat weaker, so really needing to see a change in this zero COVID policy. I'll leave it there for today, but please do join us as the week progresses. Many thanks. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.